Stock market's going nuclear. We've got a lot of winners in the new energy category as big tech looks to power all of its AI. George Tillis joins us, senior markets correspondent. We got robots we got to feed, George. Why not with nuclear energy? What could go wrong?
Well, OJ, we've seen a lot of stuff going on, obviously, with artificial intelligence, and there's, if you look at the utility stocks, quite a few of them like NRG and CEG Constellation, Vistra, VST has just come across, the ticker tape. These stocks have just been on a tear over the last year, and it's all about the expectations of higher electricity prices due to demand for AI data centers and all the technologies that are obviously in the forefront right now in terms of new technologies. So energy consumption is expected to increase, and so in the back on the back burner we have certainly other forms of energy production or electricity production outside of coal and natural gas, and that's nuclear. And nuclear has now found a little bit of an additional interest, if you will, from the standpoint of companies like Microsoft looking at the 3 Mile Island reactors to restart those. And now there's a whole group of stocks, including companies like OKLO, which are essentially starting to establish models, or if you will, designs of technologies for small modular reactors that can actually be moved to certain site locations. So there's a trend going on with nuclear energy, especially on a forward basis, based upon the demands for energy, electricity, particularly because of AI data centers and the needs in that regard. But it's not just these small nuclear reactor or modular nuclear reactor companies which have been moving. Traditional utilities, like I said, if you look at NRG and Constellation, CEG, over the last year, these stocks, in some cases triple, if not quadrupled. And Vistra Energy, symbol VST, also in that same camp. There's obviously some pricing for forward electricity going into next year, which was significantly higher, and that's pushed a lot of these stocks higher. But you have to keep in mind that these smaller companies like OKLO, which did receive a DOE approved safety design, in other words, their design was approved, doesn't necessarily mean they're approved to start operating a modular reactor. There's a lot of backing from big tech companies. Microsoft with CEG, now you have basically Amazon and Google backing some of these small modular reactors. And again, they're making investments because of the demands for energy.
Okay. George, how do we determine what's going to be the determining factor for if these trades, valuation-wise? I mean, look at these companies. Like, a lot of these are not even, they're so early stage towards profit that, like, we have to still describe these as somewhat highly speculative, even though it seems like the energy demand is absolutely real. It's going to have to come from somewhere. Might it be these companies in this sector? Sure. But, like, for each company, you've got some pretty wild financials here that you're going to have to stomach as an investor.
Correct. So first you got to separate the groups of, traditional utilities that have revenues and earnings versus not. And some of the names I mentioned, like Constellation, NRG, their stocks have gone on a tremendous tear in the last year, but they do have revenues and earnings. They've been around for a long time, and they're operating under regulatory conditions under public regulatory commissions in each respective states. Forward prices for electricity have risen, especially for next year. That's why they're on a tear. Some of these smaller players, like OKLO, for instance, which we're primarily focused on, they haven't generated a dime in revenue. And so this is a company that's still in R&D phase. I don't see any expectation for revenue, at the very least, until 2027, late 27. And essentially, with the market capitalization, yesterday was $1.4 billion, so today it's about $2 billion. There seems to be, of course, a lot of interest from speculators pushing these stocks higher. Now, you got to keep in mind, the company didn't make any revenues last year, lost $560 million. So that needs to be financed, and that's going to be financed through equity offering. So I'm just saying here that this is, I can't do any analysis on this company if they don't generate any revenue. So it's still under, of course, speculative scrutiny, and you have to consider that. There are risks involved. But there are also other risks. One, obviously, the revenue mix isn't there. There's no revenue. They're burning through cash. There's also regulatory risk and safety and waste disposal issues that are going to need to be dealt with when these companies eventually get to production stage, if they ever do. there's also national security risks because moving nuclear materials around requires a lot of planning and a lot of regulatory and even security protocols. The military uses nuclear fuel for their warships and other devices. Utilities use it, but those are basically operating under large security regimes. And so these are the challenges I see for this smaller industry, which again has caught a lot of interest, but right now it's still speculative.
All right. Speculative, but with good grounding and in the logic of kind of how, this story is going to go. So that's where I can get it. It's not like totally, out of left field. I mean, this is very much where we're going, it seems like, as we're restarting facilities and whatnot. But anytime there's excitement like that, I mean, there's going to be volatility as well. There's certainly going to be a lot of pressure for earnings to deliver, but it may not, be required overnight. These things might be able to run a little bit until we really get to, the point where the rubber meets the road and they got to generate some earnings to justify these valuations. Good one to put on our list for sure. Thanks, George.